Hello! Welcome to the live stream. Hopefully there are folks in chat. I can see you folks. Welcome. Okay, hello. There are people here. Good to hear. Good to see. Great. People can see and hear. Good to know. Welcome all. So we've got a lot to cover today. By popular request, I am doing the topic that I always say I'm not going to do, but we are going to talk about the crypto correction, as I like to call it, but essentially the collapse in crypto. Full disclosure, I am a crypto skeptic. I think that it is very speculative. However, I do understand all of the financial transactions and regulations that are at play here. And I can talk particularly about the Securities and Exchange Commission class action lawsuits that are going on about it. And then I can kind of talk about my medium hot perspective on the entire thing. I think that there is pros and cons to decentralized finance, and I think it isn't the saving grace that a lot of people tried to propose, and certainly not all of the people that loved to come into my chat and troll, which is why we're on subscribers only mode. But there are advantages to it, like the technology itself does have some pluses compared to traditional finance frameworks. And I think we should also talk about like the societal impacts. Like if you're not invested in crypto, but you have money invested in US companies, or you're based in a company that had crypto investments in their sovereign fund, should you care? Should you be concerned? Because it increasingly is playing a part in how interconnected it is with traditional, more regulated finance. So I think it is worth talking about. But there are two other things that we are going to do in addition to talking about crypto. So one, I'm giving away this lovely planner, the Sterling Ink Common Planner, which ends at noon. So if you are interested in this lovely planner, which is absolutely completely sold out, and I really like it, but I'm going to be using a different planner next year, and since it is sold out and so many people are desperate to get it, I thought it would be nice to give it away. So if you are interested in getting that, you have 25 more minutes to enter that giveaway, which you can enter at ohmydollar.com/giveaway. While we're talking about the wonders of gambling. Hold on. There we go. Planner giveaway. ohmydollar.com/giveaway. So you can enter that there. It's US only just because of shipping costs, unfortunately. And then the other thing we have is this donut, because this is Talking Dough and Eating Donuts. So we talk about finance and we eat a donut. And this is a vegan candy cane puppy chow, which I guess I always knew it as the branded name Muddy Buddies, but essentially it's like sweet Chex on top of like a candy cane donut. There is a lot going on here. So we'll see how this is, but it is pretty. I didn't do the pine one that I mentioned, which is like a chocolate orange donut on the bottom and then a full on pine flavored cookie on the top. Very Oregonian. I didn't do it because I don't like chocolate. And so I was like not up to trying chocolate, even though I am intrigued about the pine thing. So lots of people, I think, here to talk mostly about planners. The power of purpose is I just joined the Cult of Hobonichi recently. Welcome to the fold. I'm actually leaving the Cult of Hobonichi next year. We'll see if I last. But I got the Take a Note planner, which is kind of like the Hobonichi. I don't have my overhead camera today, so it's going to be hard to see this. I don't have anything adjusted for it. I could pull it up, but we got Crypto Bros to have some schadenfreude at. So, yeah. Aaron says, time to go organize my shelves in the closet. Nice. Definitely Chex looking topping. Yeah, I like Chex Mix, like the savory version. I was never really a fan of the Muddy Buddy version, but hey, it's on a donut. So, pre-show ad on why you should move to Ohio. Ooh, I'm not going to be the best advertisement for that. Jenny says, I have one off-topic subject request. May I at some point see how those fantastic sleeves are constructed? Oh, that is an interesting question. So this whole jumpsuit, this is a whole jumpsuit. I have 2 romper versions of this, and this is a full-length one. It's from Miss Candy Floss, and I could probably show it off on the stream, but you could almost definitely check out the photos on Miss Candy Floss brand website and see if you can get some up close one. I will say they are fabulous. This is like my preferred length, and it's got like the 1940s sleeves. I'm really vamping and avoid talking about crypto, right? New Bold One says, I'm so very ready to dunk on crypto bros. Aaron says that the step 1 for organizing your house is to buy a bunch of matching containers. Yeah, I mean, you can always use spending a lot of money on something to motivate yourself. Sometimes it works, sometimes it doesn't. All right, should we dive into the planner thing or dive into the crypto thing so that we can, I want to make sure to respect your time today, but we need to do the planner giveaway and eat this donut. So there's a lot to cover. And y'all wanted to talk about the crypto crash. So let's talk about it. David is reminding people that if your like button is transparent, click on it to make it solid. Thank you for doing all the promo that promo that I forget to do. The power of purpose is I know next to zero about crypto, so I'm interested to learn more. I will say, if you came from the planner world, by the way, this is like my finance related channel is just slowly turning into a planner channel. But if you came for the planner stuff, I'm sorry that this was the voted topic this week, but hopefully I can make it kind of interesting. For a long time, I avoided talking about crypto on any Oh My Dollar stuff. Like, I could have been making money, I think, circa 2017 and 2018, if I was willing to take ads for crypto on the podcast. I would have had a chunk of change that I did not take. And one of the reasons we didn't talk about it on YouTube for a long time is at the height of a lot of speculative NFTs and everything like that, I had to deal with a ton of trolls and spam and abuse in the comments. And now, all of the L's that crypto has been taking these days, there's a lot less of that. And that is because there's been massive corrections. So I'm not going to dive too deep into the basics of crypto, but let's define a few terms here. So, let's talk about from like a basic perspective, what kind of happened that is causing everybody, even if you're not like super aware of crypto, you probably have heard about the FTX collapse. And FTX was the 3rd largest exchange trading platform for crypto. The largest is Binance, and Binance will come back up. The thing to know about FTX is it was really held out as the friendly, the ethical crypto exchange. And the founder, Sam Bankman-Fried, was really held up as a darling of both like potential regulators. Like, he hobnobbed with potential regulators in DC. He was a big proponent, I mean, he still is theoretically, of effective altruism, which is the idea that, you know, you make a lot of money so that you can give a lot of money to effective organizations that will make the world better. And he had a background from working at a arbitrage finance firm. So he had a background in traditional speculative finance that led him to making Alameda. And Alameda Research was his speculative finance organization that he founded, which for quite a while was run by one of his many polyamorous lovers. So, who seemingly had almost no experience in order to be able to run this company. And he kept claiming that these two companies, Alameda Research and FTX, the exchange, were not terribly intertwined. There's a bunch of reasons why we need to talk about the intertwining, because that is absolutely crucial to the collapse. But what is important to understand is how he made money in crypto prior to founding the exchange from Alameda Research. So there's a type of way that people make money in finance, and this is in the more speculative edge of finance. So this is usually done by institutions or people who are essentially professional financial gamblers. So speculative day traders. As I've talked about several times when I've talked about NFTs and crypto, one of the things that we see is that speculative investments, day trading, ways to make money without working always rise during times of economic hardship. So one of the reasons that we saw such a rise in crypto and NFTs was during and the absolutely speculative sky high values we saw in 2021 for crypto was largely because of the amount of retail investors doing speculative trading. And I've seen some unfortunately really bad things that happened mostly to men that were part of the kind of group think within the crypto NFT world. And that isn't to say crypto and NFT, they're linked, but they're not the same. There are cryptocurrencies that have more of a fundamental value and NFTs that never have a fundamental value. Wait, what? Anyway, NFTs, all you really need to know, they're non-fungible tokens, but they're usually art that is linked to a blockchain basis. We're not going to get into NFTs because they're not super relevant to this today. But there was a lot of very speculative investing going on in 2020 and 2021 because there were a lot of people who were not working that kind of got caught up in the groupthink of let's make money while we're home. And we see this all the time. We see a lot of rise of gambling, speculative bets, things like that happen during economic downturns, especially amongst unsophisticated investors. And, in the United States, we have a lot of regulations. I've taken exams on them. I've taken licensing exams on them. We have a lot of regulations that restrict the ability of unsophisticated investors, so people that do not have a background, that people that can't afford to lose the money that they put into speculative securities. We have a lot of regulations that kind of prevent that. There are ways around it, but one of the downfalls of what has happened with crypto is that there became a lot more ways to speculatively invest, aka essentially gamble, using crypto that were outside the framework of regulation. Some of these opportunities included things like the more traditional speculative arbitrage called foreign exchange, or Forex, which you've probably seen in YouTube spam comments many times before, which is traditional and is usually done by speculative finance firms. Big Wall Street firms will do it. But one of the things that Sam Bankman-Fried, after he came from Jane Street, which is an arbitrage traditional finance firm, to found Alameda Research made a lot of money by utilizing the combination of foreign exchange rate arbitrage and blockchain. So he essentially was able to leverage the difference between what it cost to get Bitcoin vis-a-vis the US dollar versus what it cost to get Bitcoin in Japan, and trade and capitalize off that difference. That made him a ton of money. Dude was real rich. He was the richest 28-year-old in the world. Until a couple weeks ago, he was on track to possibly be the first trillionaire. And he is very, very rich. And he also talked a lot about how he believed that crypto did need to be regulated. And here is the thing. Many of the ways in which he was talking about crypto seem to be lip service, similar to his effective altruism. You know, there was a lot of, I'm super duper rich and I give this money away. And he did a lot of press about that. He also did a lot of press about how he played League of Legends during staff meetings, which apparently makes him a genius, which is, I don't know, interesting. But the thing to understand is, despite the fact that he did a lot of lip service to regulation, FTX, the exchange, third largest crypto exchange in the world that he also founded, was not based in the United States. It was based in the Bahamas. The Bahamas in 2021 did a large scale like white paper where they essentially set themselves up to be the crypto-friendly place for finances. So the idea was, we'll regulate it, but we won't regulate you out of existence. Please come here. And so FTX was not, there was only a very small arm that was based in the United States. And apparently, based on the information we have, none of the customers' assets in the U.S. exchange were lost. However, that Bahamas exchange, like many Bahamas finances that have been going on for a long time, most of that was in FTX International, and that exchange was based out of the Bahamas. And, you know, Sam Bankman-Fried was like glad-handing with all of the regulators in the Bahamas. And FTX now, as an exchange, has filed its bankruptcy proceedings in the Bahamas. There is a lot to understand about the regulation there, because the FTX owned a significant amount of property in the Bahamas. It owned, there are a lot of, it's tied to the local economy in a lot of ways. There's a lot of people that work locally for FTX. And so the regulators, it really behooves, it has an effect on the Bahamas finances, which is like, they had set themselves up to be like hey, you should come here. We're close to the United States, but we're not the US, and we have this regulatory framework for finances, but it's pretty light. That was how they were setting themselves up. But the Bahamian authorities now need to regulate, because this, like, what was allowed to happen, they have to show, if they want to continue to possibly attract other cryptocurrency investors, part of the overall ecosystem to the Bahamas, they need to show that this kind of thing won't happen again, right? Wait, why would you tell everyone that you weren't paying attention during a meeting? This is like telling the boss to go somewhere, or at least letting you know that they are rude. Yes. Joe at Alpha Creative says, I would love to see an accounting of how rich he really was. Like, how much of his money was really FTT that he made up out of nowhere. So actually, interestingly, a ton of his money was, he did, like, because this dude just loved media, like, in this absolutely bananas way. And the thing that he showed is that he had a ton of money in these very speculative holdings. Dude has lost a lot of the money that he had, because not just because of the holdings he had in FTT, which is the token associated with FTX, the exchange. Let me know if I haven't defined those well enough for anybody, because it is confusing, because these all have like 3 names. Like, everybody in this space goes by their initials. It's very annoying. So everybody calls him SPF. And then another like person that we're going to talk about is Changpeng Zhao, and everybody calls him CZ, and he is the founder of Binance, which is the largest cryptocurrency exchange in the world. And he is extremely important to this entire thing, because originally it looked like the collapse of FTT, the token associated with FTX, was essentially a play by him, a competitor, to take some of the value out of FTT. But it really, initially it seemed like it was a way to destroy a competitor, but then in some ways it seemed like he was actually blowing the whistle in certain ways on this thing. Okay. All those edgy individual thinkers, who followed the herd. Arbitrageurs simultaneously filing two opposite trades with different prices and selling concurrently, selling them for a cash riskless profit. I mean, that is one way to do arbitrage, but there's other ways to do arbitrage. The Power of Purpose says YouTube recommended a planner video, but I really enjoy your economics content. I don't understand much of it, but you make it interesting. Well, if I'm making anything confusing, please let me know, because I can stop and slow down with any of this. Kenneth says, I'm proud of you for not taking crypto ad money. I don't know. Now I kind of wonder if maybe I should have just taken their money. But the thing is, being a podcaster, it's a host read. And so putting it in my own voice, I was just not comfortable with that. Angela says, I've never advertised they were bad at working. I think you may not understand how rich these dudes were and how much they were rich off of mediocre white men can really project a level of genius when they show that they're not doing anything. It's very confusing to me, but there seems to be this strategy that someone, if you market it the right way, and this only applies to a certain group of men, that they're a genius if they manage to stumble their way into having a lot of money while not doing much. But then women and people of color that do that are considered scammers. It's very confusing. I don't know. Seems like there might be some underlying societal reasons why this perception happens. Anyway, we're not going to dive into that. Blockchains came up in some cryptography papers in the early mid-'80s, and there were a couple of attempts at cryptocurrency in the 90s that didn't go anywhere. Inverse law of outward genius. Yes. White dude does one thing, people fawn all over him. Yes, it's really interesting. This guy was seemingly very good at marketing, but the way in which he said things that I cannot imagine being able to say that out loud in any other space and having people think that's a sign of competence or a sign of good management. It's very interesting. So, anyway, this dude in Washington was the acceptable face of crypto. He was talking with lawmakers, and he was also bankrolling efforts to influence its regulation. He talked about effective altruism. He is still against the advice of literally any lawyer that has ever existed, even if they're not his lawyer, still giving interviews after this collapse, despite the fact that there is a ongoing Securities and Exchange Commission investigation of him, a possibility of a wire fraud charge, and the fact that he's in bankruptcy proceedings in a bunch of countries right now. He's still going out and giving interviews, which seems like the hubris right here. But hubris is at the core of a lot of this. Okay, so do we understand the difference between FTT and FTX? FTX is the product here. That is the company. This is an exchange. And a lot of people said that this was actually a pretty good product. It represented itself as an exchange by traders for traders. And it really was more focused on the type of speculative trading you can do on top of the regular crypto market. It wasn't used in the same way that, for example, Coinbase was used as a wallet for people to just transfer their money in and out. It was not used in the same way that when we talked about the Terra Luna, the stable coin collapse, it was very much based as an exchange that was meant for speculative trades. And a lot of people thought it was a relatively good product. Changpeng Zhao, the Chinese-Canadian boss of Binance, the largest trade, was actually one of the early investors in the FTX platform. However, it went from being this tiny, small exchange to skyrocketing in the course of a year up to the third largest exchange. And part of it is it very much was boosted by this huge run up of cryptocurrency value that happened last year. So at its peak last year, the market value of all cryptocurrencies went to the height of almost $3 trillion, up from nearly $100 billion from the start of the year. So today it's now back at what it was at the beginning of January 2021. And so when we're talking about the context of the overall market, I think it's important to understand just how fast this peak and valley is, because it very much, like, even if we say that there was a collapse in the crypto market gained so much market cap, so many affiliated companies, things that are either on chain or built with as, you know, something to interact with the chains and the currencies, so many things being minted. Like, even the current value is still more than it was worth at any point prior to January 2021. So yes, it has collapsed, it has fallen, but that peak was so unprecedented and so fast over the historic value of cryptocurrencies since Bitcoin came out 14 years ago, that you need to understand that it's still got a lot of market cap relative to its historical value. Now, why should you not worry about this if you're an investor that is not in the overall crypto landscape? If you're a investor and like your main investments are like, maybe you own a house and you have money in your retirement, and that money in your retirement is mainly invested in like, year index funds, mutual funds, things like that, traditional securities, stocks and bonds. Why should you care about cryptocurrency? Generally, you aren't that affected. Like, it sucks for some individual investors, and there are some people who most definitely have lost their shirt from what their paper value was 6 months ago, what their paper value was end of 2021. But the overall, you know, there were like some kind of mainstream investors that could affect you, like the Ontario Teachers Pension, the Sovereign Wealth Fund of Singapore. They were invested in this token FTT, which had its value linked to essentially the FTX exchange. However, still, even for the corrections and the essentially worthless investment into FTT now, it went from being valued in the stratosphere to being worth less than $1 in the last couple weeks. That is still a relatively small portion of their holdings. What is important to understand is this is really showing how much the cryptocurrency world is connected, because, you know, the collapse of Terra Luna, the stable coin a couple months ago, it knocked out some other things with us. It dampened the enthusiasm for crypto as a whole. The collapse that happened with FTX, this was held up as the more regulated, the more safe one, the golden child of cryptocurrency exchanges and products and values that, you know, was regulation friendly. And so there were more of these kind of more traditional finances that were interlinked with it. And it knocked out quite a few other things. We saw smaller exchanges go down with it. We saw, you know, other parts of the crypto currency ecosystem fold already and already go bankrupt from the FTX collapse. Okay. Angela says, this is a lot of value assigned to what I think of as imaginary money. It is imaginary money. So there's two key elements, right? Okay, one, all money is imaginary, which is essentially what I have my degree on. It's just the imaginary money. But what is particularly deadly about cryptocurrencies as far as imaginary money is that the ability to mint them on a dime without a lot of processes. And that is fundamentally like Sam Bankman-Fried was literally telling us there were he was planting red flags. It looked like a freaking, Chinese Independence Day parade. I mean, it was just like there was so many red flags out there. And he was telling people that one of the ways that he was funding a lot of his arbitrage, a lot of his more speculative investments, was by having a low trading volume, low trading volume and high market cap token. And the token that he generated, so this is this little, like piece, let's just say token. Let's just say token. Actually, it's not a bad name. So there's this little thing that you could buy, and people bought it not as a security. So they weren't buying it like a stock where they were buying a piece of the company, but it was associated with the value of FTX as a company. FTX was not publicly traded. And so if you wanted to buy into the future of FTX, one of the things you could do was buy the token that they had minted. So you could buy FTT, and people bought it as sort of a proxy tied to the fate of FTX. But what did minting it allow the company to do? Well, people were putting other currencies, other values into FTT, and essentially FTX was able to say, we will make as many of these as we want, right? It's like constantly like you can just print as much as you want, but there's no way to extract value from it other than selling it and moving it to another currency. It has no inherent value in and of itself. The reasons people were buying FTT was either that they thought they were bullish on the future of FTX. They thought this token would go up. They have a problem where they're just buying every possible crypto, which is a real issue with a lot of the people that are involved in crypto trading as like kind of as compulsive gambling. Or they wanted some of the perks because by holding the FTT token, it was considered a utility token. So by holding it, it's sort of like holding a pro status on, this is a really bad comparison given everything that's going on, but like by holding a verified status on Twitter, you got better perks. You would show up in verified people's, like in a separate mentions list. You had a perceived value within there. So you got perks when you were using the FTX exchange by holding the FTT token. However, nobody was trading these. There was very little low trading volume. So there was a lot of money put into this token that was created by the company. So it's essentially creating, like in terms of a typical publicly traded corporation on the books, this would be creating a ton of debt that is held by people. It's like essentially having a bunch of bonds that you've yielded out, where the only inherent value is the value of your company. That's what confuses me. Could I exchange crypto for Great British Pound? If not, how can you spend it? So you can, but you have to use an exchange. Some people, there are stable coins that essentially have their value tied directly to fiat currencies, which means they're issued by a government. So like Great British Pounds. So yes, you could theoretically exchange, but not every single crypto is fungible where you could move it back and forth. The thing in common with the 2008 crash is that young guys got creative and thought regulations didn't apply to them. Yes, although I will say that there weren't really regulations to apply to this. So like, it was determined not to be a security, which I think is a flaw in a reading of the law. What we saw with the 2008 crash was a lot of the stuff that was happening was well within regulations. The problem was the regulations didn't really, and it was being done within like parts of traditional finances, which is where we came with, the whole too big to fail, bailing out these banks, because if these mortgage-backed securities and these toxic assets they were creating was going to bring down the bank, it would affect all of these retail investors. I guess the plus side to this crypto is I heard a good description the other day. It's like being in an airplane. The crypto crash right now is like being in an airplane and looking down at a traffic jam. Like, it sucks for people down there, but you're not in it. While traditional finance was invested in crypto, most of that was limited to pretty speculative parts of, and the more like risky parts of their finance. And the number of retail investors is still a sliver of people that are actually involved in the traditional markets. And so, there were a lot of problems in the 2008 crash that were caused by the fact that we saw these big institutions engaging in something at this large scale that was taking people's houses, people's pensions, and wholesale packaging it up as a derivative. We see less of that simply because this is a less developed market and there aren't as many real assets tied to it. Does that make some sense? The Janiverse says, my entire search history from 2021 was about crypto scams for some reason. Probably because crypto scams were pretty big in 2021. Well, they were so big in 2021 because the value was stratospheric. And like I said, when jobs, when economies are suffering slowdowns, when people don't have as much work, we start to see people going into playing with these more speculative investments. And this is very much exactly what is going on. Michael says stablecoins can get depinned though, right? It depends on the framework of the stablecoin, but absolutely. I mean, that's what we saw with the Terra Luna coin collapsing. So we haven't even gotten to actually what happened within FTX. However, it's past noon. So I think we maybe should do the drawing for the planner, and then we will talk about, we'll eat a donut, and then we'll talk about what actually happened. Essentially the bank run that happened on crypto. I'm also happy to answer questions because I'm happy to answer questions because there are a lot of ways in which I think answering questions might help shape the conversation a little better than me just telling you the entire history of crypto from the view of someone who thinks it's very speculative. But yeah, let me know your questions and your worries. Okay, I'm going to do the drawing for this planner right now. And hopefully you entered. If not, we're going to go to ohmydollar.com/giveaway. And let's do this drawing, y'all. Let's do a drum roll. I'm sure that sounded really terrible on the mic. I'm sorry. I shouldn't have done that. And okay, last chance to enter. And drawing the winner. Okay. And the winner is entry number 666, which I swear this app might have done it. And it is Lone Tran. So I will email Lone Tran at their Gmail account. Congratulations. Yeah, I think that 666 might have been an actual plan. Whee! Maybe this was all, okay, so Lone Tran, look out for that. And if Lone Tran doesn't get back to me within 2 days, I will then email, I will draw another winner because I want to make sure I get this out to people before the end of the year. Jadaverse says, oh man, I didn't win. Congrats, 666. Okay. So whose questions, and unlike FTX, there's an actual planner to be had at the end of the day. Correct. Okay, so do we want to talk about the fall of what actually happened? Because there's, cryptocurrencies have fallen apart a bunch of times. It's not, but the big reason why this particular bank run is concerning is two pieces. One, despite the fact that FTX, which remember took money from individuals in order for them to use it as an exchange, their own terms of service said that they would not stake customers' funds, and they would not lend them out. But despite having $14 billion of customer assets, based on their own balance sheet, it has reportedly lent $8 billion worth of it to Alameda Research, a trading firm that is also owned by Sam Bankman-Fried. So it was accepting, in turn, collateral, its own digital tokens. So it was, Alameda Research was buying FTT tokens, giving them as collateral for customer funds that were being hypothecated back to the firm. And essentially what happened was that a crypto finance website reported on a leaked document with this balance sheet showing that these funds were being lent out, despite it being against the terms of service for this entire thing. Alameda Research could not give this back because the collateral they had was the magic FTT tokens that had been created by FTX. If you have most of your holdings in the tokens of the exchange that then gets a reporting that it is lending too much of its money out to you, what is going to happen? Well, first of all, one of the big people who was also one of the initial investors and is the owner of the largest cryptocurrency exchange, Binance, Changpeng Zhao, he's also known as CZ, he tweeted that because everything runs on tweets, right? He tweeted after this news report came out with this leaked balance sheet that he was going to be selling off all of his assets of FTT. And that prompted a complete bank run, essentially, on a cryptocurrency run on FTT and just completely tanked the value. That value being tanked was a huge issue because it made it impossible for them to fulfill customers that wanted to pull out their deposits, and it was lowering the value of the currency all along, which once again was the collateral that was staked by Alameda Research. Originally, Changpeng Zhao said, I'm going to try to save FTX. So he was like, hey, Binance is going to come and probably bail out or buy FTX because, like we said, this is the third largest exchange. There is value in, we'd already seen FTX act as saviors to some other smaller exchanges and buy them and bail out other crypto when we saw the correction from Terra Luna earlier this year. So, this kind of stuff happens in this relatively small space. However, apparently, according to some documents that CZ got, he went, nope. And then when he said that he was backing out of the deal to buy it, which was non-binding, so it wasn't like Twitter where he had to do it, like Elon Musk had to buy Twitter. It was a non-binding agreement that he said he was going to acquire them. Once he looked at the documents, and I think some of that was really seeing just how bad some of these, all of these kind of cyclical snake eating its tail sort of holdings that was going on between Alameda and FTX, he backed out. And then that brought the value even further because even more people were trying to pull out. They essentially had to halt customer withdrawals and filed for bankruptcy immediately in the Bahamas, which is where FTX, the major FTX, is based. There are subsidiaries in different countries. the big issue is that they essentially asked to, like, the filing bankruptcy was to kind of prevent people from taking out any of the money, because there are now like a million, they said in their bankruptcy filings that there may be over 1 million creditors. And there's a lot of shaky crypto firms and a ton of regulatory and criminal problems that kind of go into this. Their like high speed implosion has dealt an absolute catastrophic loss to cryptocurrency ecosystem, because it's like, its relatively small rise has just keep being marred by all of these regulatory issues. And the, like, one of the really scary things about the demise of FTX is, despite being held up as this regulatory friendly owner who was glad handing with a bunch of US regulators, the more that comes out about it, the more shocking it really becomes. Like, the exchange's own terms of service said that it would not lend out customers' assets to its trading arm. You know, and the fact that it accepted as collateral its own digital tokens that it had like conjured out of thin freaking air, like this really shows how shaky their balance sheet was. The last possible bit of this is that they got hacked right after they declared bankruptcy in America. Hundreds of millions of dollars was pulled out of its accounts, and they claimed that they'd been hacked, but it looks like it may have been an inside job. So there's a bunch of different ways in which there are things that could very well end up being fraud. You could very well end up seeing Sam Bankman-Fried held up as like a Bernie Madoff to be punished by the regulatory arm in the United States. The fact that we did see this kind of hack that so-called happened after they declared bankruptcy in the US, I think there's a lot to be said for there is possibly really dangerous things afoot. But we need to consider what is going to happen to the industry as a whole, because this is yet another blow for them. But like I said, it is worth noting that the value is still historically high over the history of cryptocurrencies. Binance withdraws all of its holdings from FTE. Let the game begin. Well, and that is one of the reasons why I think it's like, initially it really looked like maybe it was a play from CZ to like sort of like lower some of the market caps, and you know, it was some sort of like engineering to take value out of that, but it really sort of fell apart there. Jenny says, my husband works in internet securities for real actual banks, and he rolled his eyes and said it was for sure an inside job. Well, and I'll also say that the investors, including like sovereign funds like Singapore, that looked at these balance sheets said that they looked like a kindergartner made them. And so that is one of the things that's very concerning. 14 billion USD in assets, loaned out 8 billion of USD FTE to Alameda. Everything was fungible once it crossed into FTX. Yeah, well, and that's one of the really, like, this is one of the problems here, right? So, and then the other thing too is that like the FTT token was it was considered to be a utility token. However, people weren't investing in it as a utility token. That one, it was being invested in as collateral from Alameda Research, which is concern. But then the other big problem with it is that like, I think, you know, people were using it as a proxy for equity in the company, even though they couldn't buy a stake in the company. And it essentially was a derivative of the value of the exchange of FTX. And yeah, so anyway. Reminds me a bit of Enron at the end. Fun fact, the guy who was responsible for unwinding Enron said that this was the biggest mess that he'd seen. Wait, hold on. Let's see if I can find the quote. Okay. Okay. So Thomas John Ray III, the new boss of the bankrupt crypto exchange FTX, said the company had suffered an unprecedented complete failure of corporate controls. He's overseen some of the biggest bankruptcies ever, including collapse of the energy giant Enron, and has 40 years of restructuring companies. He said he had never seen anything as bad as FTX. Never in my career have I seen such a complete failure of corporate controls and such an absence of trustworthy financial information occurred here. From compromised systems integrity and a faulty regulatory oversight abroad to the concentration of control at the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, this situation is unprecedented. So, if the dude who unwound Enron is saying that, it's concerning. Should we eat a donut, y'all? And then let me know if you have any questions. What can I reassure you about? What can we laugh at? What do you want to know? Okay. Let's eat the donut, y'all. Okay, so, sorry, I don't have the overhead camera today, so we're gonna have to work with what we got here, but it's got like a Chex Muddy Buddy on the top, and then it's candy cane themed. And if you're new here, the reason we eat a donut, besides the fact that I live above a donut shop, so I like to have a reason to tax write them off, is because we're talking dough and eating donuts. Oh my God, it's so candy. Oh my God. It's like eating an actual donut. The Power of Purpose says, at least the donut actually exists in real life. Fair. Jenny says, I want to hear more dissing of crypto by the guy who unraveled the Enron mess. That was funny. It's new, so we'll see. I'm sure there'll be more to come. Maybe we should have a weekly feature of him talking crap about it. This is like eating a candy cane in donut form, y'all. Kenneth says, I wonder what the stadium named after these crypto companies will do. I mean, here we had them named after healthcare companies that folded, so it happens. This is pretty good. Actually, I think, unfortunately, it's very challenging to eat with the checks on the top. As you can tell, it's falling off. But the candy cane is so intense that I feel like the kind of more earthy flavors of the Muddy Buddy checks on the top is actually kind of balancing it well. Oh my God, the stadium in Montreal is named Corona. That did not age well. I mean, Corona just means king in Spanish, right? New Bold One says, it's just so sad to see that so many other individuals got taken in. Yeah, I think the really frustrating part about it is that, like, can crypto ever be useful for anything other than scams and speculation? And, there was a promise of a technology that could make financial transactions faster, cheaper, and more efficient. But the problem was the absolute amount of speculation made all of these currencies be extremely volatile. The thing that I've been working off for a long time is essentially crypto moves with the market. It just has a very high beta. There was a lot of people who were saying that you could do it as a way to sort of hedge against traditional markets. But I actually think it's just a very high beta version of traditional markets with a lot less regulatory framework on it. And beta means like it moves with the market, but it's more volatile than the market. I think that one of the risks here is that, like, every time this happens, every time we have one of these huge scandals with these big personalities and this overvalue and fraud, it makes the potential for some of the underlying technology it drives away potential innovators. It increases the potential for regulation to regulate it out of usefulness, and the industry will get smaller as a result. And I think that, like, all of this kind of early speculation and to the moon kind of situation that happened in it has consequences for crypto's ability to survive as a technology, as an alternative. David says, has someone found something useful for blockchain yet? I'm sure the military has, right? I will say, like, there is value in not having one big computer doing all of the transactions and all of the processing, and instead having it spread out. But because the values had gotten so high, it meant that it became really challenging, and then the environmental process of the mining process was really taking a hit. I don't know if they're real people, but I've seen crypto scan comments on YouTube in comment sections of big YouTubers. Yeah. Well, I noticed you also say Mr. Beast and PewDiePie, both of which have a largely young male audience, which is who has been pretty heavily dominating the crypto world lately. But one of the things I was working on was like a piece about the astrology to NFT pipeline, but luckily the collapse kind of happened before I needed to really talk about it much. Although maybe I'll still talk about it. But essentially, they had tapped out a lot of the easy markets for a lot of the NFT scams, as far as, low education, lower middle class, younger men, so men ages like 16 to 45, like that was the target audience and the vast majority of the retail world for a lot of the more scammy, edgy crypto. And that's the demographics we have, as much as we can have them. We do have a record of every transaction, but nah. But there was another group of people that were kind of anti-establishment, a little bit into having the tendency to be possibly interested in gambling. And who was that? Young women who were into astrology. And we started to see more and more focus on kind of reaching those markets. Yes, SA says fast distributed systems are absolutely useful. Kenna says there's lots of interesting technology in the world. People just say that technology is really interesting about crypto because there's not much else to say. Correct. They moved way too fast and pushed the technology to people who didn't really have a clue. I think it's very true. Y'all, I didn't think I liked this, but I really like this. I looked at it and I didn't think I was going to like it. But this donut, 4 out of 5. I'd eat this again. It's really sweet, but I do think that, like, the crunchiness and the more earthiness of next to the candy cane, it works. It works surprisingly well. Weekly crypto diss. I know, we could do it. Eric says, peppermint game on the donut is strong. 4 to 5 is higher than I would have guessed. Texture was an interesting choice. I could hear the crunch. I feel like your reviews of the donuts are a better sum than what I have. Peppermint game was very strong. I'm a fan. I like it. The shortage of graphic processors due to crypto held up creative computing, gaming, a whole host of industries. Interesting. It's not really, well, and I'm sure the microchip shortage had that. Kenna says, my sister showed me one of those crypto astrology ladies. It was wild. They've got a tidy little scam going on. Yeah, I was doing like pretty deep research into it. It's kind of wild how they were kind of finding the crossover. And it makes perfect sense as an audience expansion, because the type of people who are actively consuming astrology content, rather than like maybe they're reading it in the back of their newspaper, when they're bored with their morning coffee, people that are like watching YouTube channels and listening to podcasts about astrology and paying for astrology apps, those are exactly the kind of people that might have a bit of the countercultural bent that crypto would appeal to. And then additionally, they essentially already agree with, they have the personality that might be particularly susceptible to engaging in a speculative currency, right? And so what a lot of those were doing is they were doing things like making the chart of the US dollar based on the year that they think the US dollar was the year and the day of the birthday of the US dollar. I mean, it was just a lot of very interesting tactics for expressing skepticism about fiat currencies, and often to a pretty low economic information audience, right? These usually aren't terribly sophisticated investors, because really sophisticated investors are not the kind of audience that you need to pump up the retail investment of crypto, which is what they needed, especially for those NFTs. Crypto astrologies, it's all about correlating signs. They do want to believe. All the signs are out there. It's just like X-Files. Does anybody have any questions that I can give? Next to the Telegram me, they usually put some sort of WhatsApp number or something. Yeah, I mean, I deal with those comments all the time, but I'm a small channel, so it's easy for me to delete them. And that's one of the reasons a live chat, you have to be subscribed for 5 minutes now. I found the 5-minute barrier is usually enough. I also have to deal with the fun sexist comments too, from the drive-by. So, yeah. Does anybody have any questions? Is there anything that people don't understand about what has happened? I guess one of the things I didn't mention is what's next? Well, one, Sam Bankman-Fried is just out there with his bankrupt company, giving media interviews all the time about the collapse, which is just absolutely a terrible idea. There have been investigations opened where there's a possibility they're going to go after people for wire fraud. The big thing there is you need to be able to demonstrate fraud. And one of the things that's going to make fraud difficult to prove is the fact that there seems to be really shoddy records kept. And then there's been some analysis by some of the companies that investigate blockchain transactions to try to do investigations of that was looking at how much really was being bought by Alameda Research of the FTT tokens and how much they were actually paying for them as far as the minting of them and all of that. But the big problem is that these new wallets could be made at any time. So there's a limit to how much you can really get unless you can dig into that. And then the other part of the issues when it comes to US regulators for all the people involved in FTX, but especially Sam Bankman-Fried, is that it isn't in the most of what transactions happened is not in the jurisdiction of the United States. It's in the jurisdiction of the Bahamas because it was a Bahamas registered company. And I think the Bahamian, I think that's the proper demonym. I think the Bahamian authorities like I said, I think they have a real incentive to crack down hard on the things that they view as violating regulations. But like I said, these regulations have only existed for like a year in the Bahamas. So there's a limit to knowing what they can or shouldn't regulate. Kenneth says, was there much splashover to other investing firms? What? Yes, there was splashover. Most of the splashover was to other things within the crypto world. There really was. There's a lot of things that are interconnected. One, FTX had actually absorbed some smaller firms during the correction earlier this year from the Terra Luna collapse. AAX, BlockFi, and Liquid, all kind of crypto technology firms, not necessarily all with their own tokens or whatever, but like involved in the space, they all kind of folded from this. We're definitely seeing a liquidity crisis that is happening amongst firms that maybe had more invested in the FTT token than kind of expected. But yeah. Can you make a stream on like YouTube bots or something? It might be kind of interesting to talk about the economics of that. I don't know if I'm the right audience for that or I'm the right person to talk about that, but it's an interesting idea. I will file it away. Since crypto scams are pretty big, how much money do you think the company makes a day? I think it really depends on what the companies are. I mean, I think a lot of these crypto scams, maybe people are making dollars a day, like very little money. But it's a numbers game. And then I think some of them are making quite a lot of money. Most of them are essentially a pyramid scheme, which is roughly what NFTs are, because they're essentially the biggest loser when you're funded in a token associated with, anyway, depreciating currencies. I'm just babbling words now, but they all mean things in my head. I think the range is very high. And I think one of the disadvantages of crypto is that there's not a lot of transparency in the space. So it's not possible for us to dig up and see how much is happening. I will say a lot of people were getting crypto stolen at the height of this NFT investing. And I think that is definitely a factor. All right, y'all. Does anybody have any planner questions? So we can end on some planner modes. What do you want me to talk about next week? Because I could do a planner stream and I can set up this planner for next year. We could do a planner stream. We could talk about budgeting for 2023. We could talk about non-app budgeting methods next week, because that was a request a while. Let me know what you're interested in. And then before we go, how about people tell me what thing they're looking forward to this week? We have to pick our cabinets this week, so that's the thing I'm looking forward to. I'm both really stressed about it because we've got cabinets to pick for everything in a whole triplex, which we're actually going to be doing shortly after this. But I'm a little stressed where I think we may have to actually pick colors too right now. And I'm not good at spatially imagining things. So I'm hoping walking around the framed house will help a little bit with picking cabinets. But Jenny says, I have a planner question. Is the Take a Note weekly? So let's see if I can... So it is weekly, but it's a different kind of weekly situation. So it's essentially 4 vertical rows a day. Can you see that on there? There we go. Maybe that's better. So it's 4 vertical rows a day. And then there's like a little kind of horizontal thing on the side that shows where you can do this. So it's a week, but it's a week in 4 pages as opposed to 1 page. So it's definitely very different. Oh, Aaron wants me to do a planner stream about his new digital planner. Aaron made himself a digital planner because he got himself an extremely fancy e-ink, like iPad essentially. And so then he spent like 2 whole days making himself a digital planner and decided to list it on Etsy. So, A vote for budgeting next week. Is it justifiable to have more than one planner? I'm just looking for excuses. You're allowed to have as many planners as you want. As many planners as you want, as long as you can afford it. I would say don't go into debt for more planners, but you know what? Treat yourself. There's bad things in the world. If planners are going to solve your problems, just lie to yourself. I'm looking forward to my daughter is graduating from college this week. Congratulations to your daughter and you. Apparently, you shepherded her far enough to get through this. Congrats. Yes, Aaron has a digital planner. Maybe he will link to it in the chat and I can put it up on the screen. Non-app recommendations would be nice. My mom has a complicated spreadsheet method that stresses me out and I'd love to see other systems. Yeah, I think we could do, let's do a non-app budgeting because we've done all the app budgeting in different streams. So Aaron listed his planner Etsy link in there. David says, can you do a stream about using Notion as a planner? I don't think I'll do that next week, but I can absolutely talk about Notion. I've been using Notion for a really long time, and I kind of moved away from using it as a planner because it doesn't quite work for me. But I can talk about when it works and when it doesn't work, and like some of the ways in which you can use it. Yeah, I think that would be interesting. One for finances, one for my kids' many extracurriculars, one for household and gardening, one is a health log. I love people like you with all your planners, but I gave away this planner because even though they're both beautiful planners, I knew I wasn't going to use the two of them this year. So better to just have one in my thoughts. But I also get like a couple people, I think maybe Jenny mentioned it, like if you work somewhere where you're going to have like confidential information or something, then it makes sense to have a separate work planner. My work and my personal life all just kind of meld in together since I'm self-employed. So 4 planners. I like it. We're all just here to enable you the power of purpose. Okay, you can also buy the digital planner at shop.aaronpk.tv. It does look really good, I will say. I'm not going to buy that fancy Remarkable tablet that Aaron has. So, yeah. All right, y'all. Nobody else is something they're looking forward to this week? Anyone else? Okay, so next week, I think will be a budgeting stream. And we'll include some planner stuff because we'll talk about ways to do budgeting in your planner if you want to do kind of non-app methods for managing your budget. And then definitely end of year is going to be about goal setting for planning. I think I'm going to be streaming on Christmas this year. Christmas and possibly New Year's Day. Let me see. Because it's Sundays, right? Yeah. So Christmas, while I don't celebrate it, is the day my channel was created. So my channel will turn, I think, 17 on Christmas this year. So I might do a birthday stream. I was also considering doing a New Year's Eve stream party where we just stream for like hours on New Year's Eve and like make it like a chill hangout situation. I'd probably do a joint with Aaron and we might do it like at the studio rather than at my desk. But I was thinking about that and if it might be kind of fun because I feel like there's value in the like watching the thing on TV for the countdown, but maybe it would be more fun to do with something that feels like a little more intimate. And I am at the age where I don't go out to parties, certainly. I'm usually in bed before that. But I was also thinking I could maybe do a New Year's Eve stream that ends on midnight Eastern Standard Time, in which case I can go to bed still by 10. So, New Year's stream day. I could go for that. Better than a log burning video that loops. Oh, interesting. 17 years, I know. It's been a long time. I mean, I'm not doing a very good job of being a YouTuber, but it's still here. I'm looking forward to the end of the semester this week at work. Woot! All right. Yeah, New Year's Day stream. We could do a joint stream on both our channels. I don't know. I'm kind of into it. All right, y'all. Well, I'd be down for an East Coast New York Eve hang time stream. Yeah, well, maybe just make it like a fancy dress up mukbang and chill. All right, y'all. Have a lovely week. Have a fun time. Stay safe. Stay hydrated. I will see you same time, same place next week. Sunday at 11:30 Pacific, 2:30 Eastern. Pet a cat if you have one available. Stay hydrated, and I'll see you soon. Bye.